With me tonight on the panel, as I said, 4 experts on digital assets and digital currencies. We have Julian with us from Solarisbank, who before Solarisbank worked for Bitkom in the FinTech field, and also there had already touch points with blockchain. And now he's leading the digital assets business unit for Solarisbank. Julian, great having you. Great you're taking your time and share your point of view tonight. Besides Julian, we have Kristina from Bitwala, CPO at Bitwala. She has been with Zalando and N26, and she will talk mainly about the topic on how digital assets, digital currencies will become a topic for the masses. We have Moritz with us from TRAILITY. He's into crypto and trading bots. I kind of connect with Moritz trading bots as a service, but we'll probably dive into that during our panel. And last but not least, we have Shermin with us. She is the founder of Token Kitchen, author and enthusiast on the topic of crypto and token economy. Shermin, it's great having you here tonight. It's great having all of you here tonight. Let's dive into the discussion and let's have a little talk. We prepared some questions, and the first one I would love to hand over to Shermin. Tell us the anecdote of you hearing of crypto the first time. Can you remember? When was it?
An anecdote. Yeah, I heard of it in 2015. It was an open air rave, I think. A friend of a friend told me about it. And yeah, then I went down the rabbit hole. So I started digging up information, and I realized back then in 2015, there was no website on that would inform you what crypto is, what Bitcoin is, blockchain is. There was Bitcoin stuff, but there was really no one single website that would explain you these things. You would have scattered information on GitHub, all the social networks, and some videos. That was it. So what I started was a blog, and that blog became more. And out of that blog, we produced a lot of content to explain. I'm really quite impressed by everything I heard. I joined later, but I'm so happy. It's 5 years ago, nobody had an idea. We didn't have the words for it. And I'm really impressed that there is so much knowledge out there and so much enthusiasm in the young generation. And this is exactly what we wanted to do. So, yeah.
Definitely.
Thanks. It was a coincidence, but then a lot of things happened.
It often is a coincidence, isn't it? Yeah. Well, Julian, how would you describe crypto assets using a metaphor for it or an analogy?
I want to show why Bitcoin, also especially DeFi, is so interesting and at the same time so hard to explain to people because it is so new. And I would like to use the following as a metaphor. So when the internet came and really came into the masses, let's say somewhere in the 90s, where I cannot remember this time because I was playing in the sand, but let's say in the 90s, the internet came to the masses, and it was really hard to get, because was it a library? Because there's Wikipedia, which came later, but let's say because there are information in the web. Well, maybe a little bit, maybe not. Is it kind of a video rent service because there's YouTube? Maybe yes, maybe not. Is it kind of a bank because I can do banking? Maybe yeah, maybe not. So the answer for the question, what the internet is basically very easy. The internet is the internet. And with Bitcoin and crypto, it's a little bit the same. It is so new that we have some analogies with payment. And we saw from Oliver and Sebastian that, yeah, there can be payment applications, but it is not really like payment, at least not today. Is it like gold? Yeah, there can be some same things. Maybe I think it's much better than gold as a store of value, but same again, it's different. And also, blockchain can be just a settlement layer of tokenized assets like real estate and so on. So, is it just a clearing system? Maybe yes, maybe not. So the answer here
I
for
would
Bitcoin,
like to maybe, I really like
may I
what you're
finish my
saying. So
sentence?
the problem is
No,
that
no.
we're mixing up two layers, right? Because you were referring to the internet. So blockchain, what people call blockchain, I really don't like the word blockchain anymore. This is why I stopped Blockchain Hub and created Token Kitchen, is because basically blockchain is just a backbone of the Web3. And the Web3 is the next generation internet, and that killer application is the token. And crypto asset is just one type of token. Tokens that represent some type of real physical assets or digital assets, but tokens can represent credentials, access rights, etc. So we're limiting the conversation to, and it's also because we're in these early stages. So if we want to really understand what tokens are and what, let's not talk about cryptocurrencies, let's not even talk about crypto assets, because that's just one application. And it's a very important application, and I believe it's the gateway drug of the Web3. But the Web3 is a backend revolution, as we heard quite well, explanations of IPFS, etc. It's a set of protocols, and blockchain is the backbone that redesigns how we manage data, assets, and access rights. And all these things can be tokenized. And we manage kind of those tokens on a collective infrastructure. And it can be a public network like Bitcoin or Ethereum. It could be a private distributed ledger. And but the killer application is the token. And currently, CBDCs and crypto assets are the thing. DeFi is the thing, but there's so much more out there. So
Okay.
Thanks, Shermin, for enlightening us. What I wanted to make my point is just saying that it is so new that it is really hard to grasp, and therefore any analogy that is there yet doesn't really make the case. It is so new, the society has to learn it.
I
And
fully
you
agree.
put it in different words, and again, you're
agree.
interrupting me. Go for it. I'm fine. I just made my point. I think everyone understood what I meant, except for you.
Thanks for sharing your view, Julian. I would like to pass on the word to Kristina, who at Bitwala is working on like really enabling the mass to have access to this newish topic, at least for the mass, it's newish. Kristina, what benefits do digital assets or tokens or whatsoever, don't get me wrong with the wording here, have for me as an individual and user?
Yeah, so also first, thank you for the invite. Super happy to be here. I also learned a lot in the first session. I also just want to warn you, I'm actually also not like the super deep blockchainer. I'm actually like in Bitwala to actually figure out, okay, how can we do this crazy innovation and actually make it somehow relevant for the consumer? So already, like if you have the feeling I'm like explaining something not in the right way, feel free to jump in. But I think I actually would rather want to translate it into a way that maybe also the audience understands that is maybe not super deep into the topic. So I think like digital assets, like also as we heard today, I mean, there's cryptocurrencies, but there's all different kinds of digital assets that might come up. Yeah, and I believe there's like tons of value in it for the end user. So I think the most obvious one that we currently like hear about a lot is like basically frictionless value transfer in, yeah, kind of a digital world, right? So we don't need third parties anymore, intermediaries, like the less points of failure. Like basically, if you want to put it that way, there's no law, but the code is the law, so to say. So there's no one who actually needs to check on your risk profiles and so on. So basically we become, value transfer somehow gets like very trustless. So you don't need to trust anyone anymore because basically the code is doing like that job for us. So I think value transfer like is becoming just super frictionless, super easy. I think fractionalization is the next part, which enables us to basically own like parts of things. So if I, for example, take a very easy example, right, is kind of a share. Right now, if you want to buy a share, you normally have to buy the whole share. And if the share price is like very, very expensive, then you basically, you just cannot participate in that. And I think through digital assets, we also can like suddenly own a small part of it. I think if I want to like now make a very, very easy example, which is just like usually very, very easily understandable by everyone, is like right now, if you want to own a piece of art, for example, right, a Van Gogh. So right now, like one person can own it and like put it in their living room or in their cellar or whatsoever and like keep it. But like a lot of people maybe in the future, they don't want to own the real thing, but they actually invest into something to actually take advantage of the value increase itself, right? So maybe it's not so much about like the ownership and then that you can hang this piece in your living room. It's rather that you want to participate because you believe the value will increase over time. And I think now suddenly a lot of people can actually, be part of it and own it and actually participate in this value increase. I think this is also like great, and also like in terms of like how you want to put together a portfolio in the long run through, for example, security tokens will also enable us to suddenly participate in things that we couldn't participate before because the whole thing is just like too expensive for us. I think composability also becomes like suddenly very interesting when we think of also financial portfolios. So for example, today you might hold your shares in ETFs in one part, then you hold your like cryptocurrencies in another part, your DeFi investments in another service. And then like maybe if you even want to invest into real estate and art, this is completely out of this world. Through like standardization, for example, in tokens, you suddenly can like compose also like your portfolios through just standardization. I think this is maybe another advantage, how to compose your portfolio in a different way. I think in the long run, right, there's new use cases also coming up in terms of like machine-to-machine communication. I mean, this is a little bit further away, but if you think of like self-driving cars, for example, that can go to a gas service station, and then basically they go there and the tank is being filled, and when this contract is so to say fulfilled, then this is going to be paid automatically and so on. So there's will be a lot of use cases also around like automation, specifically in terms of machine-to-machine communication. I mean, programmable money is going to be also very interesting for us. So suddenly, when we have like digital money, so to say, we can categorize the money. Right now, in COVID cases, for example, when the government gave out like subsidies, for example, to freelancers and so on, maybe you could even like program the money and say, okay, but then you have to spend it in your neighborhoods to support like the local restaurants and so on. I think like through categorization of money, there's a lot of use cases we could think of. Or you could even like, if you give pocket money to your kids, you can make sure they only buy food from it and no cigarettes and, you know, the obvious things that people would buy for. I don't know, like, I think there's just categorization of money is going to be very, very interesting. I think in the end,
there seem to be a lot of use cases. Let's get back to them later in our discussion. First of all, and this might be a little bit egoistic because I want to know about that, Moritz. We've talked about so many different currencies. I know I've heard about Bitcoin, but there are also second and third tier currencies. Can you help us with that, jumping in that topic, please?
What has become really clear over the last couple of years is that at the beginning, 5 years ago, everyone thought, Bitcoin is the all hail, cryptocurrency, solving most of the problems. People talked about it becoming a global payment solution, transfer solution, all these kind of things. And I think it's become more and more clear over the last couple of years that this is probably not going to be the fact, right? I always, and this is why I also mentioned this when we talked before, like to classify the existing crypto assets in sort of 3 tiers. Tier 1, Bitcoin, is this, and this will remain, in my view, over the next couple of years and probably till eternity, Tier 1 crypto asset, which I consider to be this investment grade treasury asset, right? The digital gold that everyone talks about. It's a safe haven. We see a lot of companies more and more investing into Bitcoin because they simply see the fact, look, we have a problem. Central bankers all over the world are devaluing our money as it relates to the US dollar, and we have to keep our balance sheets, that they don't devalue. So we have companies like MicroStrategy in the US and many others who are exchanging their cash into Bitcoin and other crypto, or into Bitcoin, in order to stop that process. Tier 1, and it's 25% more prominent than any other crypto asset that we know out there. Tier 2, I would say, is Ethereum. Ethereum you could compare to, I don't know, the unicorn, the tech unicorn, the Uber, the the Google out there. This is where we see sort of the way more complex tech. There's a lot more moving parts behind it. And this is where it's really about the use cases and the application. So I'm really, especially, and we've heard this in our talk before, excited to see Ethereum 2.0 now finally getting on the road. A lot of exciting use cases ahead. So definitely one of the two most important cryptos. And then after that, we have the tier 3, and I think this is where it sort of gets when you want to continue this analogy, where we have this VC case startups, where probably 99% of them will fail. We don't need 8,000 different crypto assets out there, but instead only a couple of them. And there's super interesting use cases when we talk about security, speed, privacy, transactions, all these couple of things, where we see a lot of interesting projects. Some of them will prevail. Most of them most likely won't. And I think this is sort of the good categorization that I always like to explain it. Big Bitcoin, then the unicorn, and the sort of more risky startups behind it.
That definitely helps kind of definition wise. Let's get back to a more open-meant question, which is how has the role of crypto digital assets token changed over the last years? Julian, can you think of any main achievements here?
Actually, at the beginning of this session, the BaFin was in the call. I'm not sure whether the woman is still there, which is very interesting, talking about DeFi and non-being regulatable and so on. So actually, I don't want to stress this topic of regulation too much, but I think especially when we think about tokens and bringing value to the blockchain, to the settlement layer of Ethereum, for example, then regulation actually plays a huge role also for institutional adoption. And in Germany, there are some adjustments being made, or like in the process of being made, and also the MiCA regulation in Europe will play a huge role for this, to bring trust from end customers in it, be it from the investment side or to build products on top of it, but also from the institutional side, and maybe even from the ECB and so on. And we may have the delusion with that and so on, but I think it will really embrace this technology. And yeah, so I'm really looking forward towards this, and especially with my eyes from a regulated company, we think that will really make a big a move towards the adoption of digital assets, be it tokens, be it Bitcoin, be it even DeFi.
Mm-hmm. And Shermin, anything to add to that answer regarding the main achievements that tokens had so far?
A lot of it has been said, like we're diversifying. The early years of crypto was very much about Bitcoin, Ethereum. We've seen expansion in we have this definition of crypto assets and more regulation and diversification of everything we understand as asset. So we started to distinguish between currencies and assets, right? And tokenizing physical and digital assets. What is happening a lot, and what hasn't really been addressed in this session is, and it's equally important, is the tokenization of credentials, identities, and access rights. Mm-hmm. And this will open a myriad of very interesting non-fungible token use cases where I can co-contribute to the co-creation of code, books, and can be equally rewarded for if I contributed a chapter of a book, or maybe to only the corrections of a chapter of a book. Everything can be tracked, it can be tokenized, my contributions, and then the reward mechanism can also be tokenized with some kind of internal or external currency, right? So I think we will be seeing much more of these use cases, and we will see much more of what I refer to as purpose-driven tokens, tokens that incentivize an action within a system, that incentivize you to reduce some externalities, to reduce CO2 emissions, to collect plastic, all these things. You're very much, like this talk is very focused on crypto assets. which is fine, because we need to focus on one thing, and the topic of crypto assets is broad in itself, and we're now at the stage where we're trying to understand, okay, there is a myriad of crypto assets, except for apart from currencies, what can we do with it, and all these money Legos and DeFi, etc. And I think the next step will be understanding the even more complex stuff, right? Mm-hmm. And I think if so, what we will be seeing with this tokenization is that the real economy and the financial markets will be merging more and more. Money will be detached from, like, central banks will be losing their monopoly of creating money. This is why a lot of regulation has been addressed, from Christine Lagarde a few days ago to now the United States, the new government stressing that they have to control Bitcoin because people are fleeing into crypto, right? Yeah, so there will be a lot happening here in trying to regulate this, but at the same time, the applications are starting to explode. 2 days ago, the Brave browser implemented IPFS integration. And yeah, we haven't even seen the beginning of it. And we will see that crypto asset is a term that we might not be using in the future anymore.
Yeah. I wonder that still, I mean, I already told you that I'm a beginner in that topic. And when I listened to Oliver and Sebastian, I recognized that one more time. So I really wonder, what is it that makes it, or that hinders that this whole topic, I'm now not using any word here by definition anymore, this whole topic currently, or not yet, is adopted by the mass?
Well, Julian addressed it quite well when I interrupted him before. I mean, what he really said is that we're trying to explain the new world with old words, right? And this is the problem. And we're trying to, and this is why I'm saying, please rethink your word crypto asset, right? Because you're reducing it. Before we were talking about cryptocurrencies, now we've expanded it to assets, right? But this is still limiting it, right? Yeah. Which is
you're getting there.
And so, which is why I like to talk about tokens, right? Because a token is a neutral thing. It's a digital access right. And it can represent an access to something you own, an asset, something that has similarities to currency, to some kind of digital or physical asset, or it can be a token, an entry ticket to a concert, or it can represent, the tokens can represent metrics of your attention when you browse the web, like basic attention metrics, right? So, tokens can be used to create digital types of identifications, like a digital Führerschein, driver's license, passport, etc. But we think of it like a physical thing. So if we try to expand our thinking to tokens are the application, we have different types of tokens. One of them could be crypto assets, right? And as Julian also mentioned, we're still in this very, very early stages where we still don't know what we can do with it, right? In the 90s, most of you are too young. I do remember, right? We discovered email, and then it was like, a website, but then you would write something on your website, and then people didn't know what to write on their website, right? And it took society almost 10 years, from the early 90s to the late 90s, to figure out that you can create commerce websites. And everybody, literally everybody, was laughing at Amazon in 1994. Nobody was taking them seriously. Nobody was taking Wikipedia seriously. And it took 5-10 years until these type of website established, and now we had e-commerce sites, and then we had knowledge sites, then we had social media, etc. So we had the different types of websites, and what websites were to the early internet, tokens are to kind of this new generation internet, which some people refer to as the Web3, which is why I think it's really, and if we start to to understand that there is the technology layer that restructures how we manage data, because in this Web3, we collectively manage data, right? In these, like a blockchain network is a public infrastructure where anyone can be part of that public infrastructure and help be part of this collective data management system, right? And the application is the token. And some of the tokens steer those networks, yeah? Like Bitcoin, right? Bitcoin is not only an asset, it's very often reduced to an asset of speculation, a currency or an asset of speculation, but Bitcoin is much, much more. At its essence, Bitcoin is a purpose-driven token, and the purpose is to incentivize collective action in the Bitcoin network. The Bitcoin network is, the Bitcoin token is designed to be a currency, but at the same time, it's the currency of a distributed internet tribe called the Bitcoin network. Everyone is autonomous. You can opt in and opt out. You can be part of the system. And if you contribute valuable system, if you contribute to the security to the system, you can earn Bitcoin tokens in the form of block rewards. And this is a new type of value creation system. And this is, I hope, I mean, this is something I talk about a lot in my work, in the things I write, in the research we do, and in the projects that we do. And yeah, so it's much, much more. Sorry.
Yeah.
I'm monopolizing the time.
I just want to go out on a limb here for also in Julian's defense, because I mean, after all, you know, and I think his approach was also the correct one, and also, you know, Lena, the way she managed the panel. After all, we are on a FinTech meetup, and as you said, you know, the whole topic is so far. I know your book, I know your work, Shermin, and I think most of us know and appreciate, you know, the breadth of the topic. However, in a certain setting, such as a FinTech meetup, which is called crypto, it also makes sense to focus on one topic, right?
Yeah,
so,
definitely. Sorry, it wasn't supposed, I didn't mean it as a criticism. I think it's just very important because it's actually what Julian said was completely correct, is that we're trying to classify this new thing with the old world, right? Definitely. And saying this is FinTech and this is something else, I think we will see in the next few years that this classification of real economy, FinTech, etc., this will be dissolving more and more. Mm-hmm. This is the point.
If I may.
Go ahead.
And thanks for talking about me. No, just kidding. It's fine. So what I want to stress, I think, Lena, you were pointing at this specific point, what drives mass adoption of this technology, be it like used in whatever case. I think it's so interesting to now working on the other side. So like last 3 years, I was working in the tech association. We had a Shermin on our stage in the British Embassy in Berlin. Maybe you remember Shermin.
Yeah,
the British ambassador was quite fun.
Last events in Berlin.
And and now I'm working in this ecosystem. What is very interesting, and I think what will massively drive the adoption of the technology, of the asset, of the payment ecosystem around it, and so on, is so many people in all different angles working on with this technology, building things. And as we heard before, there will be things that will not work out, and a lot of things that will work out. We will only see in the future. But main drivers are, as said, the regulatory part, which is really paving the way for it. And on the other side, also UX. It is made easy to interact with it, be it in investing, be it in payment, be it in just storing things wherever they're kind of a hash, which is like the token, or like if you have a debt obligation and you can hash it, put it on the blockchain, it will be there forever. So it's kind of a settlement layer. That's what I meant before. Whatever is happening there, the UX is increasing. And imagine, like, technically a lot of things that we use today would be could have been done in the 90s. The problem was society was not educated through nice UX and so on. And companies like, for example, Bitwala are really making it so much easier to invest, for example, in Bitcoin, if you want to see it as just an investment. And we heard about Argent, which is kind of, as said, an app for this DeFi ecosystem where you can implement all these protocols. And through that, not only expert can interact with that, but everyday people like if I wouldn't be in this field, right? And I think this really drives mass adoption, and I'm really looking forward to it. And it's a really great spirit to be working in this ecosystem. It's such a huge difference to so many other industries, because it's shaping in such a speed. And yeah, I can really encourage everyone not working in the fintech or crypto ecosystem.
Are you looking for team members, huh?
We constantly are.
Kristina, maybe getting back.
Yeah, actually, I also wanted to say something, because I also do believe that, like, I agree with like pretty much everyone that we're just in the beginning of something. And I think you can compare it a little bit to the early days of mobile. Because when the first mobile applications, for example, came out, what people did is like basically they squeezed together a website and like throw it into a mobile phone, and that's it. So we actually try to also, like what we always do, right? We take what we know and then we apply it to a new technology or to a new device or something like that. I think if you look back into like the first books that were printed, right? Before we had like handwritten books. And then if you look into the first printed books, they looked also a little bit like handwritten books, because that's what people knew. And at some point they learned how to use those block letters, and that might be even better. And I think the same is like with the first iPhone, when we tried to replicate the physical world in the iPhone, like the calendar looked like a real calendar. The design was terrible until we figured out, hey, actually we can like let go and actually build something which is like even better with the given technology that we have at hand. And I think the same is like happening both with Bitcoin, like with tokens, like whatever we can build on based on Ethereum. I think also, you know, with Bitcoin, like the first use case, if you think again from a more mainstream audience, was like, oh great, it's going to be like this universal currency, and at some point the whole world would pay with Bitcoin. And I mean, you still can do like at Lieferando, I always smile when I see that you can still pay with Bitcoin. Or back in the days, you know, the Room 77 days here in Krevestrasse in Berlin, you know, where you could buy a burger with Bitcoin. But I think these days are over, right? I think the success of Bitcoin, so to say, was its own failure. So people like bought and held it. So I think, as we also said, like now we're actually a little bit over it. It's like more this kind of store of value why people are investing in it and like keep it like for a longer period of time, or what we heard about MicroStrategy and so on. So to actually like hedge against inflation. Then I think like in 2017, it was all about like ICOs raising capital, which was also important to actually start innovation, you know? And I think that's why regulations are very important, to actually make it also more attractive for the masses to be more trustworthy. But then on the other side, we need to be careful with over-regulation, because it also blocks innovation. Because I think specifically now in the DeFi world, open finance, I think this is now the biggest product market fit, like outside of Bitcoin. I think there's so much opportunities right now where we actually need, I think regulation is great because it creates trust, and it makes, I think it paves the way towards some more mainstream use cases. But then on the other side, it shouldn't be over-regulated, so there's no room anymore for innovation and like trying all those new things. Because I do believe we're at the very, very beginning. As we were like, for example, with mobile, did we all believe in 2010 that you can use your mobile phone to open cars like Car2Go, that these kind of things would come up and like people would borrow each other like their cars by just opening it with a mobile phone? Or you'd like go out and like you just take your mobile phone and pay everything. Like I don't even take cash anymore. Like I do literally everything on my phone. So I think all these use cases are so normal for us. But if you would have told this someone, like I consulted on mobile in 2010, like this was nothing that people would have believed in. And I see the same. I see the same opportunities now coming up through digital assets, through tokenization of things and so on. And I think there's a lot of use cases that will become very relevant also for the mainstream at some point in time. But I do believe to a certain degree, we can see now there was the Bitcoin bull run is still going on. So we can even see like more and more people jumping on it. I think why is that to a certain degree? Because people are looking for simple answers where to store their money, because it has become so complicated to put money aside. Like the savings accounts are worthless. All the rest, how you can invest your money, you need to read through, you need to understand it. bam, but Bitcoin is easy. You move money from A to B, done. It's really risky though. I think, I would not advise like to people to put 100% of their money into Bitcoin. It's my personal opinion though, but I think you should hold Bitcoin. And I think also, for example, specifically right now, it's a very male held asset. I think also more females should invest into it to have like kind of an equilibrium in the long run.
I would like
but yeah, we're not there yet. And I think there's still some critical things that keep the mass from fully adopting at this point in time, even though this has changed a lot, specifically in the past weeks.
I remembered in our preparation call that Moritz said, well, it's nice, Julian and Kristina, that you take care of bringing that to the mass. Moritz, more or less, if I got it right, is focusing on some more nerd niche. Moritz, could you quickly explain what you are up to with TRAILITY?
Sure, thank you very much. But this, as I said, it's a quite specific topic, so I really don't want to. How do you say? I don't want to enter any shameless plug in here or something. So we are very much in the trading niche of crypto, as we know, just one of the many applications, and this is also a little bit of a different background that I come from. So I really come from the trading. I actively traded a lot as a private person, and simply realized that when you go against the pros on Wall Street, but especially also in crypto, you don't really stand a chance if you do this manually all the time. So our approach is and was at the time to develop trading bots first for ourselves, and then later on a platform on which people can create their own trading bots for them to trade automatically. We will also launch a marketplace in Q2 this year, where people can follow other people's trading bots, so that they could finally also have a chance to compete with the big guys who have a lot more money and a lot more experience in creating complex trading algorithms.
Okay, so what can I trade at TRAILITY? Is it?
We currently connect to the large crypto exchanges. In our vision, and this is also why Julian is a very important partner for us, whom I have very good talks with. We envision a setup, of course, where we won't be needing any exchanges anymore, but instead people will trade fully automatically and fully autonomously on our platform, with all the the complex stuff happening in the back end with trusted partners, of course.
Right.
Yes, but crypto only.
Okay, that helps. Shermin, you said you broadened the variety of use cases here, but can you think of one use case, doesn't have to be fintech, that you think will be the most relevant one in 2021?
Yeah, I think central bank digital currencies. Crypto people hate it, but I think what we need for central banks after Libra, I think most of you are aware, after Facebook announced Libra, which this really spurred very few central banks were at that point looking into digital currencies or CBDCs tokenizing central bank currencies. But they saw that this player with over 2 billion users will be a big competitor to national bank money. And what we're seeing now is the end of last year, the Bank for International Settlement made over 80%, almost 90% of the central banks worldwide are looking into tokenizing their currencies. So now with this bull run on Bitcoin, I think this will give another kind of be another catalyst for central banks to make the current financial system and more efficient. I think, and with central bank digital currencies, we will have wallet usability. We will have wallets that can manage tokens because we need that one killer application that many people will start adopting. So that could have been Facebook, but they got a lot of backlash. They were too visionary, whatever, too early in the game. And it could be central bank digital currencies. It's the most banal application, but it might be kind of the gateway drug to most people having a crypto wallet. And on top of that, we could build many, many more things. The question is whether the central banks, how open they will create their wallet applications. And how fast they will implement that, right? The Chinese are very fast. Christine Lagarde is talking about 5 years. It's a bit ridiculous. But I think we might see also with the potential economic crisis, it's been a crazy year last year. Things are happening that we never thought would be happening. And yeah, so CBDCs. Probably.
And Julian, what use case do you see, particularly in 2021, rising?
I think payment is correct, because there's so many network effects in it, and because it's still so fragmented, this market. Like still, in like a friend of mine had wire transfer from the UK to Germany, and like when I heard that, I thought that cannot be true. Like they took days with even German direct banks were supposed to be a little bit more digital, as you thought, as you may think, and it took days. And for example, the most problematic thing was like 20% of the amount that was sent was gone away. Maybe there's a scaling effect, right? If you transfer 1 million, it will not still be 20%. But this is such a thing that needs to be disrupted, and this technology will make it. And with huge ecosystems, like look at Clubhouse, right? You just need one new interesting feature to have massive scale. If you have AWS in the background, nothing will hinder you from scale massively. And if you then implement such thing that really connects people and brings value to, there's actually another analogy to blockchain technology, where when you have the internet from back then, it's kind of the internet of information, and the internet with blockchain, Web 3.0, it's kind of the internet of value. So if you now can interconnect all these thousands, millions, maybe billions of users with a settlement layer, with a payment application, imagine this growth. So and payment will probably just be, because it's nice use case, right? It's a exchange of value, and if this is possible cross country, cross continent, even with astronauts and on the ISS in the universe, wow, that's a big thing. And I think payment will be definitely in 2021.
Yeah. We are, thanks for sharing. We are, getting to the Q&A session soon here. So one last question from my side to kind of close up with
something to the 2021 thing, because I think we haven't really talked about like lending and borrowing, and I think this is actually also use cases that are coming from the world of decentralized finance, which are actually becoming super relevant, I think also for the masses in 2021. So sorry, I'm actually trying to have the mainstream classes on here, but I think we already like see there's a lot of possibilities now coming from the world of decentralized finance already last year through lending protocols, and like actually a lot of people now investing already into DeFi, leveraging the high returns that can be done by lending out your digital assets, your crypto, even borrowing against your digital assets. And I think these are the use cases that are like moving out of the niche and will become way more accessible in the upcoming months and years for the mainstream. Just to give you also some examples, right? So right now, for example, if you want to get a credit, right, you go to your bank and they do a lot of risk checks and so on. And basically, there's a lot of checks to be done until you even get access to liquidity. If you hold digital assets, you basically can borrow against them. So basically how it works, if you want to explain it in simple words, it's like I hold a Bitcoin, which is actually worth, I don't know, $35,000 at the moment, something around that. So actually have a lot of money in my wallet, but actually I don't have it, right? I need liquidity because I need to pay a down payment for my house. So I actually can freeze this amount in my wallet and actually get some liquidity against it. And I think that's actually super, super great, because a lot of people already struggle to these days hold maybe ETF portfolios with a lot of money in it. But actually, if you need liquidity, you actually just need to let go all of the ETFs. And I think there's a lot of great use cases that that actually happen through the opportunities of decentralized finance. And yeah, I believe these are the services which will be very, very relevant on the B2C side in the upcoming month.
Mm-hmm. Mm-hmm.
Upcoming months is, I think, a bit optimistic. I like optimism. I've been working in this industry also for a while, and every year in January you hear that 2020, 2019, 2018 is going to be the year of X, and usually it turns out to be only a couple of years later, if at all. So, you know, one of the reasons why Bitcoin is still the thing that we talk about. So, Kristina, don't want to you know.
I'm going to send you an
push
invite
back too much, but you know, to say that 2021 is going to be the year where DeFi hits the mainstream is, I think,
no, I'm not saying. I say they get more accessible for the mainstream. I don't believe that it's just so easy that you bring out a cool product and everyone jumps on it. I think there's more to be done. There's a lot of more like education guidance to be done. Like there's trust to be built up. But I think at the moment, I think the biggest problem why these things are not really hitting the mainstream, in my opinion, is because they're too complex, they're too complicated. I think Julian mentioned earlier, like it's a terrible UX. If you go, like, to be honest, if you just go into the Binance app already, I think a lot, like the normal user is actually off if they just try to buy a Bitcoin there, you know. So I think right now these services are maybe not even made for the mainstream, and maybe it's even a good thing, because I think people should maybe know what they're doing, but I think there are more and more services coming up to just make the access easier. So also like more mainstream users who don't want to like dig deep and like maybe not super tech-affine can also use those services and leverage the opportunities. And I think this is a trend that would definitely start in 2021. And I can tell you, because Bitwala is also like working on something like that. I think this is the end of it, also our mission, what we want to do to actually make those things more accessible for the masses.
Okay, I would really like to get to the questions from the audience. There is one which I can just state to you, saying thoughts on taxes and crypto.
Wow. Ugly topic. So like there's one rule every German knows, and this is like, if you buy Bitcoin, don't sell it before the 336th day, because then it's tax-free. Before, it's not. Yeah, I mean, luckily, like we as a crypto custodian, a regulated party that can store crypto assets for users, and we are luckily not obliged to do the tax calculation and derive tax from the gains, as custody banks who custody securities, Wertpapiere in German, do, which is very good. And I want this to stay that way. That's what I want to say. It's a really complex topic, especially when you consider DeFi, if you consider airdrops where people are rewarded for participating somewhere, and really bring that into German tax law. Well, ugly topic.
Okay, let's leave it like that. Potential advantages of CBDCs for the masses over deregulated alternatives, especially if some of the alternatives are trying to be pegged like MakerDAO, and the potential effects on tier 1 to 3 deregulated currencies. Anyone on the panel wants to pick up that question from the chat?
I could try. So CBDC is the abbreviation for central bank digital currency. So this one is the regulated one, and but there's for masses over deregulated. If deregulated means unregulated, there's maybe a little bit of a mix up. So the CBDC would be the regulated one, and unregulated, let's call it the MakerDAO the MakerDAO stablecoin is DAI, the decentralized. Our speakers before talked about. I think there are massive advantages to have the DAI one, but on the other side, I think the approach how the regulator will regulate this will be the following. Bitcoin and DeFi cannot be regulated, but what can be regulated are the central parties. For example, in Germany, the crypto custodian. The same with money, right? You may can you really regulate a banknote? Maybe not, I can do whatever I want, but any position like collecting it in a commercial way, be it a bank, be it ATM, be it a payment service, these parties are regulated. So if the regulator does not want DAI to become bigger, let's say there's a MakerDAO euro denominated stablecoin, if the regulator does not want this to float around, it can simply tell us that we are not allowed to handle that. This is kind of how it will be regulated. So whenever these things, and Shermin pointed this out quite specifically, if it becomes too dangerous for central banks, because there's power derived away from them, then there will be state interference, then there will be regulation, or in these cases, they will forbid us to interact with these protocols. Yeah, but one example for advantage definitely is borderless, permissionless, anyone can interact with that and so on.
Thanks. Another question is, do you see any impact on the whole crypto ecosystem, which stems from quantum computing? Still a few years in, but wouldn't it break down all the tokens, keys?
No, cryptography is always an arms race. It's, yeah, yes and no. So that's the whole point of cryptography. You know, you perfect it. It depends, right? The good blockchain networks have sophisticated mix of cryptographic standards to provide enough security. Bitcoin, for example, has that by using different types of cryptographic algorithms in the setup of the public and private keys. It's to be more resistant to quantum computing. But if you have a less other blockchain networks, IOTA has been criticized for the cryptographic algorithms they use, right? So it depends on the type of network. In theory, cryptography is an arms race. If you do it well, it's not a problem. Some blockchain projects don't do it well, but they don't have too much traction either. As an investor, you need to understand a little bit, either have a basic understanding of that, or be prepared that some of the core technology you might be investing in might not be quantum computing resistant. So in that sense, it's a valid question. Yeah, but it's not an absolute yes or no. It depends on the quality of the team and the quality of the network. Yeah.
Okay.
What is more important, much more, and most people don't talk about it, is the intersection of blockchain, Web3, and IoT, giving every machine in the network and every object along the supply chain a crypto accelerator, a blockchain wallet, and the masses of data that we have and the applications that we can build on that. So this kind of intersection is much more interesting than the quantum computing part.
Any urgent last remarks from the panelists here? Other than that, I would come to closing it up and call it a panel. Let's call it a panel then.